You know, we all see artificial intelligence completely changing the world right now. But honestly, while everyone is hyper-focused on chatbots and funny AI image generators, Wall Street is quietly pulling off something massive. They are literally turning the actual words generated by AI into a tradable commodity. We're looking at a high-stakes reality where the digital output of AI is being financialized right under our noses. This isn't just about picking the right tech stocks anymore. It's about commoditizing the raw digital resources of the 21st century. Stick with me through this explainer because we're going to unpack exactly how this is happening and what you need to know to understand this massive financial shift.
So what exactly is the new oil? Look, for years we were told it was data, but the paradigm is shifting incredibly fast. The real gold rush today isn't just in gathering massive amounts of data, it's actually in the raw compute power and the digital tokens that fuel artificial intelligence. The value is moving. It's no longer just a race to see who builds the best AI model, but who controls and who prices the foundational building blocks of those models.
And what's wild about this is the sheer urgency we're seeing. Financial groups aren't just casually interested here. They are rushing to build entirely new infrastructure. We're talking hundreds of billions of dollars pouring into the space right now. Major financial institutions aren't waiting around for this technology to mature. They are laying the tracks while the train is moving at top speed. If we ignore the rate at which this infrastructure is being built, we might just miss the next great financial gold rush entirely.
Okay, let's dive into our first section, grounding this in the physical hardware. The GPU spot market.
Anywhere from $1.40 to $4.27. That right there is the current hourly rental spot price for an Nvidia H100 GPU. By anchoring this abstract AI concept into hard financial data, we can see there's a robust physical spot market already at work. Businesses are out there renting this massive compute power by the hour, and having that predictable baseline pricing is absolutely crucial. It's the very first step toward full financialization.
And because we have that stable spot price, the financial heavyweights are stepping into the ring. I'm talking about major institutions, specifically the CME Group and the Intercontinental Exchange. And by the way, they actually own the New York Stock Exchange. They are already establishing futures contracts based strictly on these physical GPU rental prices. This is a game changer because it means investors and companies can now place bets on or hedge against the future cost of renting the hardware that powers AI.
Moving on to Section 2, let's look at how this builds into pricing the digital output.
Now, we need to bridge a massive knowledge gap right here because there's a ton of confusion about this. When we talk about an LLM token, we are absolutely not talking about cryptocurrency. So no, this isn't Bitcoin or Ethereum. These tokens are the fundamental computational building blocks, the literal fragments of data and AI uses to, quote-unquote, think and generate answers. It is a metric of raw compute power and utility, completely separate from a digital coin.
To put that into perspective, just look at OpenAI's enterprise pricing for GPT 5.5. It's a perfect illustration. Notice the massive split here? $5 per million input tokens, but a whopping $30 per million output tokens. Tokens are no longer just technical jargon for the engineers. They have a hard, defined financial value based on the exact amount of compute required. You are literally paying for the precise computational effort needed to generate a specific outcome.
So how is the big money handling this? Let's check out Section 3, the Wall Street infrastructure.
You have to realize this isn't just some localized trend. It's a massive global financial race. International powerhouses are actively laying the groundwork as we speak. For instance, the Shanghai Futures Exchange is already designing specific derivative markets focused entirely on AI tokens. Why? Well, because businesses running these massive AI operations face insanely volatile computing costs. These derivative products will eventually allow businesses and investors to hedge against the unpredictable cost of AI computing. It's exactly like how an airline hedges against the cost of jet fuel. Meanwhile, the CME Group and Intercontinental Exchange are racing to build the institutional trading frameworks to support this whole shebang.
So where is the smart money looking right now? They are staring directly at the cloud competitors. You've got Amazon Web Services, Google Cloud, Oracle, and a wave of emerging neo-cloud companies. While direct retail trading for token futures might not be totally public just yet, these giants are battling fiercely to host the underlying compute infrastructure today. They're the ones competing to offer the compute services that actually generate the tokens Wall Street wants to trade. Keeping your eye on these platforms is absolutely essential for understanding where this market is headed.
Which brings us to our final takeaway in Section 4, the new compute standard.
Historically, if you wanted tech wealth, you started at step 1, owning the physical hardware. If you had the servers, you had the power. Simple as that. But then, value migrated to step 2, pricing the digital output via these tokens. And now, we are rapidly entering step 3, trading compute derivatives. The core value has migrated all the way from tangible servers sitting in a massive data center directly into the financialization of the digital output itself. This right here is the new trajectory of tech wealth.
It really makes you stop and think. Just as the global economy used to be anchored by the gold standard, are we watching the birth of a new compute standard? In a future where AI drives almost everything in our world, the raw capability to compute might just become the single most critical utility on Earth. So the big question is, how will you position yourself when token generation